So how much cash do you actually need to buy a $5 million commercial property? Well, it all comes down to what the rental yield is. So let me explain. So let's say we want to buy a $5 million commercial property. You're going to have some purchasing costs like stamp duty, legal fees, etc. So there's probably roughly another $300,000 to $350,000 in costs. So you need a total of $5.35 million to basically settle on the property. So how do you now work out how much money you need for the property? Well, it comes down to the rental income. So with a commercial property, the good thing is you can go and apply for a lease stock loan. So lease stock loan basically takes what the current income of the property is and applies some metrics and it spits out the maximum loan amount. So how does it work? So let's say this property that we're buying has a yield of 5%, which means the property is generating $250,000 in net annual income. Typical banks will apply two metrics to the income. Number one is called the income coverage ratio, or ICR. So that's basically the buffer that the bank applies on the rental income to calculate the serviceability. Now, most banks in Australia use a 1.5 income to coverage ratio. Most banks will then take 250,000 and then divide by 1.5, and that becomes the serviceability amount. So in this instance, it equals $166,000. Okay, so this is the ICR adjusted income that the bank is going to use to calculate the serviceability of the loan. The second metric that they're going to use now is they're going to apply what the interest rate is for that particular property. So right now in Australia, the interest rates for commercial lease stock loan is around 5.6 to 5.8%. So let's call it the interest rate 5.8%. Okay, so now what we need to do is we need to divide the interest rate of 5.8 to the ICR adjusted rental income, and that will then give us the maximum loan amount, which is the maximum loan equals $2.87 million. So that's the maximum amount that the bank's going to lend you on this property based on this rental income. So the difference between this and this is the amount of cash that you need to put into the deal, which is $2,480,000. $2.48 million. So that's how you work out how much money you need to put into the deal. Now, using this example again, let's say the rental income is more. Let's say the rental income for this property is actually $300,000. So what does that mean? So let's say the rent is higher, it's 6%, equals $300,000. Okay, the ICR is the same, 1.5. So the ICR adjusted rental income is $200,000, and it divided by the interest rate, 5.8%. So the maximum loan equals $3,450,000. So the difference between this and what you need equals $1.9 million. So this is the most simple way to work out how much cash you need to put into the deal. The only three pieces of information that you need is what is the net rental income, what is the ICR that the bank typically uses, and what's the current interest rate. So you divide one after the other, it's going to give you the maximum loan that you can borrow from bank. So now if you want more tips on how to structure finance for your commercial property, then definitely hit the subscribe button, and I'll see you in the next video.